Hello, good morning. Thank you so much for staying on the AM show. It's now time for us to continue with our big stories, this time focusing on the debt exchange. You may be aware that today is the deadline for individual bondholders to sign onto the program. Already, government has made headway with the banks, insurance, and securities companies. But what is the progress now, and what can individual bondholders do, even as we wait for an official communication on government as to what exactly will be happening after close of day today? Joining me for that conversation is Professor Lord Mensah, lecturer, University of Ghana Business School. We also have Dr. Edu A. Entry, who will be joining the program much later. Let me start with you, Professor Lord Mensah, and thank you once again for joining our program today. Today's deadline day, and we're yet to hear anything from government. We know communication has happened on the agreements reached between the banks, insurers, and securities. What are you expecting, really? Should government listen to the demand of the individual bondholders and let them go off totally, or it can reach a certain agreement even as we wrap up the day today?
Yeah, good morning, and good morning to our viewers. As it stands now, the meeting that the ministry had with the individual bondholders, we don't really know what has come out of it. But then I can tell you that the government needs the buy-in of some of these individual, bondholders to get this bond through, this exchange through. I mean, if we should go by the target that was set, as we speak now, we know the government has gotten the buy-in of the banks. And then together with the Bank of Ghana, and looking at the annual debt report of 2021, I think the government should go through by 50% of the target, if we should go by the numbers then. And so effectively, if the target was 80% to declare the entire exercise a successful one, then the government still needs, more funds to declare that, this was a successful, exercise. So effectively, they still need a buy-in of the individual bondholders. But then the question is, what offer has the government got on the table? I presume that initially on the government came with that kind of all-size-fits-all, debt exchange. And looking at the engagement with the banks, and then engagement with the pensions, engagement with the individual bondholders, you could see that now the government is trying to look at how they can, meet the needs of the various, stakeholders in the government bond space. So I think, at the end of the day, if government does not revise its target, then probably we may hear an announcement of an extension, because it looks like they may not be able to hit a target as it came up in the earlier, exchange proposed.
Prof, do I get a sense that you do not agree with the individual bondholders when they say that government does not need them to sign on to this program for it to have a successful debt restructuring? We are told by conveners like lawyer Martin Pebu that they have offered other alternatives to government on how it can go about restructuring this debt exchange. It's debt, I beg your pardon. So are you saying that as a matter of fact, individual bondholders or a certain percentage of that number must sign onto the program for it to be successful?
Well, in exchange of this type, you may have what we call free riders, and you may have what we call those who jump onto the wagon. And then it is expected that at least you may not get everybody to get your buy-in. But then the question is, when the bond exchange goes through, and the interest rate structures that prevail on the market, would you be holding a valuable bond? Those are the questions you may have to ask. So effectively, I'm looking at it from the financial sense. I may not want to go into the law, sense to say whether I agree with the individual bondholders or not. The whole exercise is an exercise which is more of a national exercise. At the end of the day, if you don't buy into it, which normally we term it as a free rider, situation, you ask yourself, the bond that you are holding at the time, would it be, valuable on the market? Because at that time, long-term bonds interest rate will be selling at the prevailing rate of the exchange, which we are looking at 10% thereabout. So effectively, who is going to buy a bond that will be, paying coupons of 20%, 19%, 21%? And so we may have to look at all this and then, think through it very well. And what is missing here is the benefit that, these individual bondholders tend to gain when this exercise goes through, which is missing in the communication we've been having every now and then. I mean, clearly, if it turns out that the economy comes back, of course, I agree with them. They may not have that comfort, to accept that the economy is likely to bounce back because of the history we have with the current administration in terms of when, the space, the fiscal space improves, the way and manner they go about their spending cannot be something that you can rely on. And as a result of that, you may want to hold your old bond. But then let's look at, aftermath of the exercise and think through it and see whether the bond that you'll be holding will be, a valuable bond or not.
Interesting. One of the conveners of the Individual Bondholders Forum, Senor Husi, has asked members not to panic, obviously because it's deadline day, nothing substantive has been said. I was just going through the Minister of Finance and the Ministry of Finance Twitter pages just before I came on air. And apart from announcing that Ghana's debt exchange program has made some progress, there's nothing real, substantive being said with regards to the individual bondholders. What should the individual bondholders be doing now, considering the fact that we've not heard anything from government? Should they wait, or should they sign on to it? Can government make that decision? Like you've just said, what will the real value of their bonds be if this debt exchange program goes through? Should they take the risk, or should they hold on?
Well, if you look at the happenings, if it were not to be the position of the government to impose, the entire debt exchange program on the bondholders earlier on, I thought maybe that bilateral kind of, engagement was very necessary, even though it came in later. I believe that over the past few days, the engagement they've had with the ministry has put up something that they may have, confidence in, to say that, okay, fine, government has exempted us and we are comfortable. But then in the end, if government should exempt you from it, like I said earlier, aftermath of the exchange, would government continue to be able to pay you your 20%, 19%, and then the 25% thereabout, that as proposed in the exchange, the bond that you are holding? Those are the questions we may have to ask. You see, this entire exercise is about, holding up an instrument that you can have access to your funds. This is more or less a systemic failure. And when a system is failing, it is expected that one way or the other, you get a compromise, but not to the kind of harsh compromise that, the finance minister proposed earlier on, looking at 0% in 2023 and then 5% thereon, with a 10% coming later. I believe that with a serious engagement, they should get to a point where the individual buyers, individual bondholders, will get the buy-in of the people.
Right. Sorry about that, Prof. You can continue, or you're done with your submission.
Yeah, for now.
All right. Okay. So while this is happening, there are a lot of other things happening within the space. When I say the space, I mean the economic space. So we know the announcement of an increase in the policy rate to 28%. We've also heard from the finance minister that there's been an oversubscription of treasury bills. Do you see that people are beginning to divert or look at treasury bills because of what's happening within the bond space? Are people beginning to lose interest there? And what do you think generally will be the impact of this whole exercise within the space?
Well, you see, we may have to appreciate that the debt exchange has come to distort, the financial space. It has changed the yield curve completely. If I say the yield curve, I'm looking at the various, financial instruments, their maturities and the interest rate or the coupons that they promise. As we speak now, the Treasury bill is one of the highest, instrument you can have in the economy. And I'm not surprised at that, because for every time, the long-term investment or the long-term horizon, poses a threat to the investor tends to reduce its horizon to a point where they bring all their investment into short term. So when I heard the announcement that it's likely Treasury bill will be affected, then I said, okay, fine. If Treasury bill is affected, then the investor may want to take, his or her money away from the bank and then bring it to his house to control it himself. That is what the extreme situation will be. But then if we should look at it, in our investment perspective, clearly, every time the long-term investment poses a threat, and we got ours when the announcement was made. An announcement was made in such a way that it was as if an entire restructuring is being imposed on, the investor community, which the investor community has no say. Either you take it or you hold it, for which at the end of the day, nobody, cares about what happens to the investment that you are holding.
Hello, Prof.
Somebody muted me. Right. So, yeah. So from the hello, can you hear me, please?
Yes, I can. Yes, I can, Prof.
Yeah.
Please.
From the communication that were coming from the various, government machinery, I sent a signal that if you're holding the bond, you hold it at your own, cost. Your old bond, you hold it at your own cost, which wasn't a good communication, because in the investment space, the hottest commodity that you can have is information. So if information is coming out from especially management, and nobody have access to management information. So whatever you put out there as a manager is what the investor is going to process to take a decision whether they will invest in your bond, which is basically, long term relative to short term. And we see the short term to be something that you can easily turn to money. And, Treasury bills have been capped as near money kind of investment. So most of the time, anytime investment, tends to pose threat in the long term, the investor is going to reduce its horizon. And that is what is happening in the country now, which has affected the yield curve. Treasury bill is promising around, 35.6 thereabout. And then the bonds that we're looking at now, as people are holding it, the old one is going for about 20% on the average. And then if we should go through with this, debt restructuring, we're going to have 10% thereabout, going forward. And so we are looking at the sensitivity of the investment community, the kind of information you put out there. So as we speak now, I'm not surprised at, what is happening, where the demand on Treasury bill is so high, because people have, come to understand that probably Treasury bill may not be affected, and therefore they should be comfortable with that one.
Interesting. Let me now welcome Dr. Edu Entry, convener of the Pensioner Bondholders Forum. Good morning to you, and thanks for joining the program. Now, you at a time in the middle of this month were requesting an exemption from the debt exchange program, and your argument was simple, that if pension funds were exempted, then as pensioners who also held bonds, you needed to be exempted. Have you had any communication from government? We are yet to see an official publication, but as a group, have you had any communication from government as to what is the way forward with you? Well, we lost him, unfortunately. Dr. Edu Entry, convener of the Pensioner Bondholders Forum, was on the line, and I was hoping that he could answer that question for us, but we'll try and rework the lines and get him back on. So back to you, Prof. So as it stands now, well, we don't know what the deal will be. We don't know whether the Finance Ministry is preparing to extend the deadline for the individual bondholders or agree to their deal for an exemption. But while we wait, persons like yourself and others have demanded for government to show some level of commitment itself in our debt restructuring, i.e., downsize government, cut down expenditure. Now, one of the latest to comment about this is the secretary of the Ghana Federation of Labour, and he is actually asking that Article 71 office holders take a 50% haircut. We are yet to see this, and I'm just wondering if it still sends the wrong signals to persons like individual bondholders that government is not willing to take its fair share.
Well, the exercise that, the economy is going through is an economic reform. We shouldn't look at it as, something that is affecting only bondholders. And as a result of that, they are the ones, that are supposed to defend, their position. We should look at it as a national exercise. As I sit here, I get worried about how, we're going to manage the economy post the exchange, looking at the trauma and the exposure we've given to the investor community. That's my worry. Governments are behavior in terms of, not listening to cutting down or downsizing, the number of ministries and all those, put fear in some of us. Because, of course, I'm a Ghanaian and I'm a stakeholder for which, at the end of the day, I must get to know what my taxes are doing. And this investment, space, what is happening there, whether directly or indirectly, it affects me as well. So I need to know what exactly, government is going to do, post, the debt exchange. We've had a government that has not exhibited that kind of, financial discipline, over the past years, for which everybody is wondering if we should get that fiscal space. Because the essence of this exercise is to make sure that the government's, in terms of interest commitment that it has been doing over the years, which has been overburdening, the balance sheet of the economic activities of the country, we reduce interest payment. That is the benefit of the entire exercise. And when government reduces interest payment, there's going to be that kind of inflows in terms of, indirectly, in terms of the interest that government was supposed to pay. And if we are to get an IMF, deal, that is also going to bring in some inflows. Apart from the discipline that IMF will bring in when we go through the program with them, recently they announced of 0% financing from the Bank of Ghana. The earlier IMF deal we had, it was 5% we got from them. And this time they're going to be harsh. They're going to be harsh by declaring 0% financing from the Bank of Ghana, because it didn't take us longer time before we went back to them. So the trends of financial indiscipline has more or less exposed us. And they're in the mindset of citizens like us, and then also individuals who have invested with the government. They know that once the government gets that free fiscal space, and remember, we're going into 2024, which is an election year, and you can't joke with government overspending, trends in this country over the past, in this current republic. So effectively, we want government to give that kind of signal, a signal that, yes, I'm prepared to cut down my expenditure. And going forward, that is going to be the momentum that I'm going to use to manage this economy. And we should have had that, signal from the budget that was read before this debt restructuring. I can tell you from the budget that was read that, government knew very well that we will be downgraded, on the international bond market, and as a result of that, we may not have access to the international bond market. And how did I get to know this? If you look at the financing structure of the budget deficit that was declared in the 2022 budget, clearly, government knew very well that access to the international market would have been a problem. So all the financing was concentrated on the, domestic market. So you could see for that particular year, government was looking about 80% financing from the, domestic market. So effectively, the signals were all there. And so I was expecting that going into 2023 and knowing very well that there's, imminent, debt restriction about to happen, government would have given the citizens a signal that, they're going to cut down expenditure. But that wasn't the case. Expenditure was jumped from, 145 billion to about 250 billion, about 99 billion, expansion in terms of expenditure. Revenue was also jumped from 100 billion to about 145 billion. So effectively, the gap of about 65 billion that, was supposed to be financed has been problem.
And considering all that is happening, Prof, do you find, especially the revenue bits, do you find it realistic?
I mean, I saw the entire budget to be kind of a phantom, budget, which I'm expecting that it will go for review. If it does not go for review, the reflection of the domestic debt exchange should come into the media review.
I'll come back to you shortly, Prof. I'm told we have Dr. Eduentry back on the line. He's convener of the Pensioner Bondholders Forum and former Director General of the Securities and Exchange Commission. Good morning to you, and thank you for joining the program. So, in the middle of this month, your forum was demanding an exemption from the debt exchange program. And your reason was simple. You say that if pension funds were exempted, then as pensioners who hold bonds, you should also be exempted. We are yet to receive an official communication from government on deadline day. But have you in any way received any communication of an exemption from the entire deal?
Well, thank you. I didn't get your question well.
I'm asking if you have... Hello, Doc. I'm asking if you've received any hint of a total exemption from the deal. Did I lose Doc again? Apologies for that. Apologies for that. We'll try and raise Doc on the phone instead. It appears that we're having a bit of challenge with Zoom there. So back to you, Prof. And I was talking about the alternatives proposed by the individual bondholders to government on how it can raise more revenue or save money so that they are exempted from the debt exchange program. And they talk about reviewing the regulatory environment to increase oil production. Government should exercise its right under the ACA Petroleum Agreement for immediate commencement, expedite reforms to enforce property taxes, rise above politics and fully enforce VAT invigilation. They talk about pursuing the recovery of funds lost through financial irregularities of MDAs in the Auditor General's Report 2015 to 2022. So what you heard are just some of the recommendations given by the individual bondholders to government on how it can save money and in order to exempt it from the debt exchange program. We've been able to raise Doc back on the phone. Hello, Doc. Good morning to you once again. Hopefully we have a stable connection now. I was finding out from you if you have received any hint of total exemption from the debt exchange program. Today is deadline day.
Well, we haven't received information on that, the total exemption. But we are still hopeful that we will receive it. We were expecting a statement yesterday. The government hasn't come out with a statement yet, as far as I know. And so we are hoping that we'll get the exemption. We've made a good case for exemption for the pensioners, retirees, whose main source of income these days happen to be, most of them happen to be only the coupons from their investment. So even regardless of the fact that some individuals, general individuals, will not be exempted, for pensioners, they must be exempted. And as I always say, even in our traditional setting, culture, our native wisdom, when you are at the village and you have gotten to a certain stage, they don't let you pay funeral dues. In Sawa, We take you out of contribution towards the burial of the dead because you are weak, you are old, and you are exempted. That is basic native culture and wisdom that we should also be able to do same in our governance. That for the elderly, don't emburden them so much. You don't put so much weight for the elderly to carry. They can't. So even if everybody can carry, the elderly ones must not be made to carry that load that will lead them into their debt.
Doc,
so I believe government will understand and exempt this vulnerable group.
Are you willing to come to a compromise? When we look at what government agreed with the Association of Banks, initially government was not going to pay any coupons for this year, but with the Association of Banks had agreed to pay 5% for 2023 and remove all clauses in the exchange memorandum that give the Republic the mandate to solely vary the terms of exchange. Is this something that you're willing to agree to, or for you it is total
I
exemption?
believe if the government grants the total exemption to pensioners, definitely their bonds are going to mature. If they mature, they will come to the join what is prevailing in the market. So let them go out now from this exchange. Let them continue to take that small coupon they are taking, which they are using, and I can't stress again the fact that this is what they are using for their medication. And if it's not coming, they are bound to end their lives shorter than earlier than what maybe God has ordained them to live. So for us, it should be total exemption. In everything that we do in the whole universe, there are exemptions. You can't let everybody carry the same load. People are being taken care of in the advanced world. The retirees are taken care of. They don't take care of all other people, but the retirees, they supply them with drugs. They give them a lower tariff for even electricity. They take bus free once you are holding a bus pass. So the elderly must be taken care of. So we shouldn't deprive them of that small income they are using to take care of themselves, because society has not been structured to be taking care of the elderly the way it stands elsewhere. So total exemption is what the elderly needs.
Doc, this space is not new to you. You are the former Director General of the Securities and Exchange Commission. Would you say we could have avoided this, getting to this point where we have to discuss a debt restructuring or a debt exchange program?
Well, if you borrow to a certain level and you cannot handle the payments of your coupon and principal, definitely you will land in this area. You come to this position. The borrowing, everybody knows that we have borrowed too much. And if we have limited our borrowing, maybe we wouldn't have been here, and maybe the borrowing, somebody would say it was for projects. But you can't do all projects at the same time, They say Rome was not built in a day. If you want to develop Ghana to become like Dubai in the day, it's not possible. So we should have done it gradually. You take on this project, very high cost project that you are doing. You do 1, 2, 3 projects, and that alone, it's better than spreading our resources over so many projects, and therefore we don't have the resources, and we have to go and borrow to the extent that now we cannot pay our debt. So, next time I think government would have to look at it and say, let us cut our quote according to our size. We can't. All the projects are good, but you can't undertake all these projects at the same time when you don't have the resources to finance them, and you have to be depending on loans. And loans have its limits. Once you have borrowed to the extent that you can't pay, that gives you a bigger problem than not borrowing too much and concentrating on few projects and making sure you are doing what you can do.
Interesting. So there's just some information we are putting up on our screens, and it has to do with the parties involved in the debt exchange program agreement and exemption. So you can see the pension funds have been exempted, and we know there was a lot of fight and pushback. That was on December 22, 2022. The Ghana Association of Banks reached an agreement with government on January 23rd. Shortly after that, the Ghana Insurers Association, January 26th, and the Ghana Securities Industry on January 27th. What we aren't setting off is individual bondholders, of which the Pensioner Bondholders Forum is a part of. And there was a promise of exemption on January 27th, but that's all it remains, a promise. And we don't know if government will stick to that promise, or we won't see any deviation from it. But for you, Dr. Entry, the agreement between the Ghana Association of Banks, Ghana Security Industry, and the Ghana Insurers Association is on our screens right now. I don't know if you've taken your time to go through it, but would you say that that's a fair deal compared to what was being promoted by government earlier?
Yes, there has been some improvement, at least for the first year. The first proposal was 0 coupon. You are not going to get any interest on your bonds. That has been raised to 5. The banks have looked at their balance sheet, the insurance, everybody has, and they think that that is okay. I think another major thing that has also been changed was a clause in the offer document, if you want to call it, that invitation document, that government could change certain terms in the document at its own without recourse to anybody. That has been changed because you cannot go in for give a loan to your debtor, and then he has a way of coming back to change the conditions under which you have lent that money to him. That wasn't a good thing, and that has been changed. And I'm told they have also gotten some clear understanding of how the financial stability fund is going to be used, how it is going to be handled. So they are okay with it, and they are moving. We are all fine that at least we have. That's all that about that I kept on saying negotiation. You cannot do this without negotiating with the authorities. So at least that negotiation has been done, and we are moving forward. It's the individual bondholders or individuals that has not been. But I believe the minister, because from the meetings that we have had, I believe the minister would offer something also different, because you cannot let the bank take 5% and tell individuals to take 0%. No. According to the minister, when we were in a meeting, he has even said, well, the individuals may have to get something which is maybe higher or better than the banks. I've also said that individuals are not like corporate, which has a longer life. We will call them in accountants a going concern. Until something happens to the organization, it will be there, for years to come. So if companies are giving bonds of 15 years maturity, you don't expect the individual to accept a 15-year bond maturity. We are all hoping we can grow old. We are praying to God, but there is no guarantee that you are going to be alive for the next 15 years. So an individual will not like his bonds to be pushed into a 15-year. So I believe these would be factored in the new arrangements that the government will come out and say, well, individuals have shortened your the span, the maturity. I have suggested that individuals should not be, if I have involved, individuals should not be giving bonds of a maturity about 10 years. No, don't let them go into 10 years. Give them something that is lower than 10 years so that they can say, well, our money will be there. Gradually, we will receive our our principal in this, but by the end of the 9th year, we would have taken all our principal back.
Doc.
So I believe that these things will be factored in the new arrangement that the minister will come out. But for the pensioners, it should be total exemption.
Right.
They can't afford any such arrangement.
From what you've just submitted, I get the sense that even if government will not totally exempt individual bondholders, the subset of pensioners within that group must be totally exempted. You sound quite confident in your talk about the exemption of pensioners. Was there any exclusive promise made to pensioners by government? What was the last thing you heard of with your meetings?
Well, in all the meetings, everybody seems to be understanding that you can't treat the elderly like that. Our society, that society that we live in, we make sure we take care of our elders. That is our culture. That is our tradition. We don't push our elders into their grave. Even when they cannot make it, they are very sick. We still want to support them to live. And then our grandchildren, their great-grandchildren, we will be happy you have given birth and your great-grandchild, and you go and show it. The mama touch the baby, small baby, and say, "Oh, Nyamin Shirao." That is our culture. We want the elderly to live for a long period. So nothing should be done to break this. When God has given them some long life, definitely because of these sicknesses, you cannot be strong up to your 120 years or whatever. You will be weak. And that weakness, you fight it gradually with drugs and medication. And so for these people, vulnerable group, whatever it is, they should be exempted. If nobody at all is exempted, the elderly must be exempted. They have played their role. They have finished their course, as the Bible says. They have finished their course. What again should you ask them to come and contribute? What the contribution will be by way of advice. They say, "Nanayin Kogus Abrewa." But that Abrewa we are going to ask, we don't tax the Abrewa to do a work. But we only go and consult and he gives us advice. Let us treat our elders the same way. Exempt them. They are there. They don't have any strength to do anything. Again, they have finished their course.
Right,
they
Doc.
need to have some peace.
Briefly, Doc, from you, we heard from Senor Hosi, who is one of the conveners of the Individual Bondholders Forum. He asked his members not to panic. In 30 seconds, I'd like you to send a message to pensioner bondholders on what they should do while we await an official communication from government.
Well, we have said, as the forum, we have said that the pensioners should not tender in their bonds, because we know we will get that exemption for that vulnerable group. Any society, and the minister said in one of his statements, any society that doesn't take care of its elders is not a society we want to build in Ghana. We don't want to see Ghana as a society that doesn't take care of its elders. I have been involved for about 25 years taking care of the elders in my village. Every Easter and every Christmas, I go around all the elderly people, the sick and the people, to give them something. And they appreciate it. That small thing that you are doing. Because they don't have anything to live on. Please, government should understand and just ensure that these pensioners are exempted so that they can even say the good things about when the elderly, you force them to go into their grief. Even on their deathbed, they will be cursing people.
We appreciate your time here.
Who are forcing them to leave this world early.
Thanks for your time here this morning, Doc.
They should be exempted.
Right. We appreciate your time. Dr. Edu Entry is convener of the Pensioner Bondholders Forum and also former Director General of the Securities and Exchange Commission. And earlier you heard Professor Lord Mensah. Prof, your final words, even as we wrap up this, what do you hope to hear from government by close of day today?
Yeah, I think if we did not get any revision or extension, then probably government should assure Ghanaians how it's going to manage the economy post, the debt exchange, so that we can revert the economic situation that we find ourselves in now.
Thank you so much, Prof. Professor Lord Mensah is with the University of Ghana Business School, and you heard him share his thoughts earlier before Dr. Edu Entry. You're still watching.